Hey folks, welcome back to Ancestry Lands Motivates, and we're stepping away from our normal content to bring you the latest in market pulse. This week could be pivotal. The Fed's tone and surprising job data and heavy earnings calendar are all in a mix. Let's break down what to watch, why this matters for you and your wealth building strategy. First up, we all love them, the Fed. The central bank continues to grapple with inflation and growth. Markets are passing on every word from Jerome Powell and his team. Any hint of a hawkish pivot or even a pause in rate cuts can ripple across markets, impacting everything from real estate, tech stocks, to investment appetite and risk assets. With land investing, for example, higher rates can dampen buyer interest or raise financial costs. So this isn't just macro talk, which links back to what we do next. Coming up, the job fronts. The recent unemployment numbers came in below expectation, raising questions about the robustness of the U.S. labor market. When the data is a miss, it signals a cooling economy, which might make the Fed more cautious or put it at ease. So, paradoxically, weaker jobs can also spook the market by raising fears of recession. For investors and landowners like myself, this dynamic matters. A softening economy might reduce demand for new homes and land parcels. On the flip side, if the Fed responds by loosening policy, it could boost liquidity and asset prices. Finally, earnings season is in full swing. Yep, it's the end of the year and major companies across the sector are releasing their results this week. They'll provide a fresh reading on corporate health, consumer demand, and margin pressures. The markets will be watching for forward guidance, not just past performance. And why should you care? Because that corporate strength underpins economic momentum. And when major firms flag weakness, it could create headwinds for risk assets. In the land market, this translates into signals for broader demand, financial conditions, and investor sentiment. So, what should you do next? Here are 3 actionable items. First, track the Fed. If Powell signals restraint, it could be a green light for risk assets. If hawkish, prepare for that volatility. Second, watch the jobs data closely. An upside surprise could boost confidence. A downward surprise could trigger defensive positioning. And third, pay attention to earnings. Focus on forward guidance from large companies, especially in computer tech and industrials. Meanwhile, your land investing blueprint, stay liquid, avoid overstretching yourself into new deals right before the potential market shifts, and lean into story-driven positionings like lifestyle demand, homestead, and off-grid options, which can insulate assets during micro or macro turbulence. This wraps up our market briefing this week. If you found this helpful, smash that like button, hit subscribe, and follow us for more insights trying to figure out these market moves and wealth building strategies. At Ancestry Lands Motivates, we want to tell you about making smart money moves, not just watching the money move. See you next time. That's it, folks. You can go to Ancestry Lands to start owning property today with payments starting at $250 a month, no credit checks, and owning land has never been easier. It's time to build your land portfolio one property at a time. We help you to get dollars from dirt and build generational wealth by owning small plots of affordable vacant land. Contact us to learn more. Oh, and speaking of dollars from dirt, I also wrote a book about investing in land for you readers out there. My book, Getting Dollars from Dirt, A Beginner's Guide to Vacant Land Investing, is on Amazon. The link is in the description section below. Inside, you'll learn simple, easy to read insights that will have you understanding why you should own land today. For more tips and tricks, subscribe for updates, comment below, and let us know what you enjoyed about this video. Thanks for watching, and I'll see you in the next one.
And remember, like and subscribe.